Hey guys, it's Johnny FD, and today I want to share a story with you on how I made all my money through buying and selling stocks. So today's actually a really good day. I woke up, I looked at one of my notifications with just my shop account where I have some Facebook stocks, some other couple of random things. It went up by $3,000. I was very, very happy to see that. But then I actually logged into my other main account and my account actually grew by 19,000. So in total, I've now made $22,000 just today in buying and selling stocks. However, there's a lot more to that story, so stay tuned in the end for some lessons learned and some advice. But let me actually just take today's time and let you know how I started. So back in 2004, so about 6 years ago, I had just started earning money. At a low point, I was down to $1,000. I was living in Thailand, and I was basically an underwater tour guide. I was also trying to make it as a professional fighter, as a Muay Thai fighter. And it was hard. I hardly made any money. I would often do these professional fights with no protection gear and no health insurance for a few $100s to just try to survive. But it was my passion. I really, really enjoyed doing it. I really loved doing it. At that point, I turned 30 and I realized I can't do this for the rest of my life. I need to actually make some money. And that's when I decided to set myself a challenge. It was called the Gold Watch Challenge. If you want to know more about that story, let me know in the comments. I'm happy to make a video about that. It's called the Gold Watch Challenge. I actually wrote about it in my first book called Life Changes Quick, second book, if you want to check that out. But today's topic is what I did with that money. I remember thinking, wow, I have $30,000. This is more money than I've ever had in my life. I mean, that's basically what I would make after tax in a year, because I made $48,000 a year in my corporate job, and after all the expenses, I was stuck with about 30 grand left. And I remember just asking everyone, like, what should I do? And luckily, I knew this guy named JP, who was the richest guy I knew, and I said, JP, I have $30,000. I want to invest. What should I invest in? And he said, I don't want to give you advice. And I realize now most people don't want to give financial advice because if you lose money, they end up coming back to you. But I'm very, very grateful and thankful that he took the time and the risk of sitting me down and explaining to me what he was going to do, which is why I want to share this with you guys today. So he said, Johnny, I don't know what you should do, but I just bought a significant amount of Facebook stock. I think it's undervalued. I think it's going to go up. And I said, why do you think it's going to go up? Why do you think it's undervalued? And he said, well, the earnings call just came out and it shows the company's profitable, but for whatever reason, people don't like it. And guys, I want you to remember, this is 2014. Facebook was really popular in 2000s, 2010, 2012, whatever. And then it kind of just lost a little bit of popularity. Some of you might be watching this thinking like, I don't use Facebook, or yeah, I can see why, it doesn't seem like it's worth as much. And at the time, I was out of the US and I had saw that people in the US might be, the younger generation might be, gravitating towards Instagram or Snapchat, but people in other countries really loved Facebook. People in Thailand are on it all day, every day, so it was very actively used. But for whatever reason, people in the stock market thought, hey, this isn't, worth as much as it should be, so people started selling it. And one of the big complaints at the time was Facebook wasn't profitable. It wasn't a profitable company. Just like most startups are, when they start, they're just trying to get as many users as possible, but they're not really worried about making money. But Facebook had just started their advertising program. And even though a lot of people tried it and gave up, saying nobody's going to buy anything on Facebook. People aren't there to shop. It's not Google. It's not Amazon. People are on there to talk to their friends, share photos. This will never work. However, I had a little bit inside knowledge as someone who not only knew a lot of other entrepreneurs or internet entrepreneurs, but also someone who was using it myself. And I knew that it did work. It just wasn't the same type of sales cycle as when someone types in, picnic table, waterproof, free shipping on either Amazon or on Google. They're pretty serious about buying right then. But I knew that Facebook was different. It wasn't trying to give them something that they already wanted to buy. it was introducing them to things that they didn't know they needed yet. So things like the fidget spinner, or things like, an ebook, or something that like they didn't know they really needed. But when you show it to them, you're like, oh, this is pretty cool. This is a, let's say it's a coffee cup that has like a built-in strainer in it that you can make coffee on the go, which I wish it was. But if I saw this on Facebook and it was like $5, I probably would have bought it. So that's actually why I knew this would work. Is I had friends who had just started doing well with Facebook, and according to the numbers, JP said, hey, this company actually financially is doing pretty good, but for whatever reason, the stock price doesn't reflect it. So I'm buying Facebook stock. And I thought, you know what, this guy's smarter than me, so I'm gonna trust his advice. So I put $10,000 and I bought a bunch of shares, I think 145 shares at the time. It was $69 a share. And it was the biggest purchase I ever made. First time I ever buying stock. And I was kind of a bit freaked out, to be honest. So I set something called a sell limit. Where as I bought it, they asked in Shop, and this is the same as TD Ameritrade or E-Trade or wherever Robinhood, wherever you buy stocks, it's probably similar. I was able to set a sell order where I put it for $55. And my rationale was, if Facebook drops by 20%, at least I only lost $2,000. I can still get my $8,000 back. Not that big of a deal. And the best thing that ever happened to me was I posted that on my blog, johnnyfd.com. And I'm so used to posting everything on my blog so transparently that people have been following me for years, literally decades, through college when I was making a bunch of silly mistakes, going through those years, all right? Learning, about how to be a man, learning how to meet women, learning how to diet or exercise or travel. I put it all out there, and a lot of it's embarrassing, to be honest. And a lot of times, I wonder, why do I feel this need to share everything? But I'm so glad I do, because it helps me learn and grow, and also lets me look back on where I came from. So I posted this with my idea, and I actually had a screenshot showing purchase for $69, stop loss at 55. Luckily, someone who I never met left a comment on my blog. This guy named Ed from Hong Kong. And he said, Johnny, I followed you for a long time. I've gotten a lot of value from your posts about the travel and other things. It's my time to give back to you. He says, I'm a dentist and I'm a millionaire, but I'm not a millionaire because I'm a dentist. I'm a millionaire because I'm investing. Get rid of that stop loss. And I was, a little bit scared, right, to be honest. But at the same time, even though I had not met him, I knew he was coming from a good place. He was very intelligent, very, like, the way he detailed everything was very smart. I got on the phone with him and asked him to explain to me more on why that was. And remember, this is before I had read any finance books. This is 7, 8, 9 years ago, before I had ever invested in anything. And thank God I listened to him, and I got rid of the stop loss. And within weeks, Facebook dropped from $69 to $57, basically at my stop loss. And I thought, oh my God, what should I do? So I called JP, my mentor, and I said, what should I do? He said, Johnny, I can't tell you what to do, but I can tell you what I did. And I said, what did you do? He said, I bought more. And I was like, oh my God, okay. Why did you buy more? And he explained to me, look, as long as the company's not gonna go out of business, and it seems like it's undervalued still for whatever reason, people are panicked and they're not paying full price for it. I bought more. Now my average cost is not $69 and it's not $55, it's right in the middle. So my average cost is, $60 or so. And I thought, okay, that actually makes kind of sense. So I bought more. I bought another 100 shares, which was, $5,000. I thought $5,700, and I was like, oh my God, half my money's in this now. Let's try. And it drops to 55, and I panicked again, and that was actually where I would have sold everything. And I called JP, I was like, what did you do? And he said, I bought more. So I said, all right, let me get in this. I bought another 100 shares, $5,500. I'm now in this for $20,000. This is pretty much everything I've ever earned and ever saved. This was it. This was my big gamble. And luckily, I had these people in my life. I had started studying and reading up on and educating myself and just talking to people who were smarter than me. And I just let it ride. And eventually it went back up. And I did something that's, I guess pretty safe, pretty prudent, but in retrospect, I wish I would have not did it, right? But everything in retrospect, and that's probably a big lesson to take away, is everything's easy when you look back. But at the time, I was scared. So I said, you know what? I have too much money in this. I have over $20,000. That's almost all my money. When it goes back up to 69, I'm just going to sell those first 145 shares that I bought at $69. That way, my average cost, instead of being at 69, is going to be at $56. And I'm going to hold it there. So I sold it. That was a break even. So all I lost was the $9 trading fee that Shop implemented. Nowadays, a lot of brokers don't even have this $7 trading fee anymore. And it was fine, right? And I just left it. And I worked, and I focused my business, started earning more money with my online business, doing other things. And Facebook started going up. It went up to $100, $150, $200. And this was about 6 months ago in mid 2019. And then by November 2019, I decided, you know what? I'm going to sell half my shares. Remember, I had 200 shares left that were valued, at the time, I had spent about $11,000 on it. But at the time, they were worth about $200 a share. So I had almost quadrupled, 400% returns. And I sold half of it. And I said, you know what? I might regret this, might go up even more, but let me just get some of my money out and play it safe. I sold it, made $20,000. And that was everything that I had put in, plus actually the $10,000 I had already taken out. So that was pretty much, I had basically made in total $30,000 from this investment, and I still had 100 shares left. And actually that price, Facebook started going up more, and actually at the top, it was at $250. Right now, because of the coronavirus pandemic, whenever you guys are watching this, everything's falling, right? So right now it's at $150, but I'm still 3 times up. So my $5,000 investment is still worth $15,000. So if I cash out today, I would still be up 10 grand, which is pretty nice, right? But I'm gonna hold on to it because I think it's gonna keep going back up, and I'm not in a big rush to sell it. Now, Facebook wasn't the only stock I did this with. I did this with Robinhood as well. And I actually did this because I was a user of not Robinhood. I bought the stocks of Robinhood, but it was with Shopify, which is a online platform, kind of like WordPress for hosting, but it's for websites, e-commerce businesses. So I was a user. This is how I made all that money, the $30,000, and I was still running these businesses. I was selling physical items online while traveling. So things like furniture, big tables, big chairs, big kind of furniture items that were too heavy for Amazon to ship. And I had one of these websites on Shopify. So I knew Shopify was a great platform. It was recommended to me by my e-commerce coach, this guy named Anton Kraley, who I took his course and I learned kind of the ins and outs of online business from him. And he had gone through all the different alternatives. I don't even remember the names now. There's Shopify, there was something, there was one on WordPress, there's all these other ones. And he went through them all and he said, you know what, here's the pros and cons. Shopify is the best. I recommend them. So I've been using them. And this guy named Andrew something from Citron Research decided to go all over CNBC News and said that Shopify was a scam, that he was shorting the stock, which if you guys aren't familiar with that term, means he's betting against it, that's gonna go down. And he said that it's a scam, that only a handful of big legitimate companies are using Shopify. The rest of the users, tens of thousands of users, are fake users, or they're these scam online businesses that aren't actually selling anything. And I looked at it thinking, what is this guy talking about? I know hundreds, if not thousands of people who have legitimate businesses on this platform. And I think in his mind, if you're not Nike or Adidas, you don't have a big office in New York, that you're not a real business. And he doesn't realize this is 2019 at the time, 2020 now. Like, people work off their laptops. I mean, literally, I'm working here off of this MacBook Air. I've made now probably $700,000 on this laptop. And it's a 2013 MacBook Air. It's almost 7 years old now. Maybe I'll make a video about that. If you want to know more about that, leave a comment and I'm happy to make that. But I made my businesses using Shopify and this laptop. And I did it while traveling. I was living in Thailand. I was moving around. I was in Eastern Europe for the summer. And I was thinking, man, like, this guy has no idea what he's talking about. This is a legitimate company. So I bought shares of Shopify at $90 and $95. So average price around $93, let's say that. And the price dropped a little bit more. And I regret not going all in and buying 100 shares like I did with Facebook. But I had already promised myself, you know what, I don't want to gamble. I don't want to gamble my money with stocks. No one knows what's going to happen. And I'll be really upset if this guy tanks this good company just by creating panic and fear in the world. So I didn't buy that many shares, bought a few $1,000s worth. I thought, okay, let's just leave it there. And the price went up. It went up to $150, $200, $250, then $300. I ended up selling all my shares at around $313. So again, I tripled my money. Today, in end of March, almost April 2020, the stock market is going crazy, up and down. There's a lot of stocks that are undervalued now. They're down by 30%, some 50%, some more. A lot of popular ones that people were talking about over my Facebook, over YouTube, Boeing, Disney, and all these stocks that have dropped by so much. I mean, literally, I have friends that have lists that they're watching and they're just waiting either for it to go down more or they're buying now. And I was watching a video from a guy who I really like that does calisthenics, like barbell workouts in New York, and he films other guys doing it. And in one day, that video had 2,500 views of people saying, "Oh, thanks for this advice. I'm also going to buy some stocks." And he was telling a story on how he made a lot of money buying Sirius FM stocks when it first came out, and he had bought something like $80,000 worth of it, and then it tanked and almost went out of business, and the shares went from like $60 a share down to 50 cents, and that he bought more when it was down, and it got saved at the last second and it shot back up, and then he suddenly made $652,000 or something like that, over $600,000. And I remember sitting there doing the math thinking, he didn't make $660,000. He put in at least $110,000. So at most, he made, let's say 500,000, which is still a lot of money, right? Of course. But also, he had kept it in there for 11 years. If you had just kept that money in almost anything else for 11 years, like index funds, like a broad stock market, like S&P 500, it would have doubled in that time anyways, actually more than doubled, because it would have doubled in 7 years. So that 110,000 would have been worth $250,000 anyways. And what he didn't mention was he almost lost it all. And everybody ignored that point where he was like, yeah, you just gotta hold it, you gotta stay strong, buy more every time it goes down. And it's true. When something's going down, the only way to offset the cost is to buy more. And that's what I did with both Facebook stock and Shopify. And this is what he did with SiriusXM. So I would leave this video saying, oh, look how smart we are. This is so amazing. You should just, buy stocks. This is cheap. If you make a lot of money, send me some through the Cash App. But here's the harsh reality is most people are going to lose a lot of money during this time. And this is why I really wanted to make this video. Most people, especially people who aren't actually that familiar with investing, that don't think of, the total cost basis, how many years he had kept it in there, the opportunity cost lost. These people are going to end up losing a lot of money because yes, some stocks are undervalued and you can buy it at a big discount and potentially you can go up to full price or more and you can make a lot of money. If you buy Boeing right now at 70% off and it goes back up, you just made a lot of money, just tripled your money in a week or a month. But what people don't factor in, there's a very big chance Boeing is going to go bankrupt. And you might say, but they're too big to fail. These companies will figure it out. Government's not going to let them, lose all this money. And that might happen. But here's the thing, is they don't really care about you, the shareholder. There's a very good chance what they'll do is they'll be like, well, we want to save ourselves. The easiest way to do that is we're going to file for bankruptcy and then we're going to restart the company and start fresh. So all the shareholders, you guys who invested, are going to get nothing. They're going to rebuild. Their CEOs, their kind of big guys, they're still going to make money. They're going to get big bonuses for saving the company. We're going to ones going to get screwed. So as tempting as it is to buy Disney, for example, I'm like, oh, Disney's a good company. Nobody's going to go. No one's going to ever let Disney go under. Disney's never going to go under. They have Disney Plus now that's doing pretty good. People are staying home, watching Netflix, watching Disney Plus. They have Star Wars on there. But here's the thing, is none of us know what's going to happen. So if you want to buy individual stocks, you have to realize 3 things. And this is kind of the big lessons I want everyone to learn. One, it's gambling. Unless you have some inside knowledge, and even if you do, there's no guarantee, because I thought I had inside knowledge and I turned out to be right, but maybe I was just lucky. Maybe this guy was lucky, right? And second, there's the lost opportunity cost. So putting that money into any of the stocks and holding it for 10 years, you could have made a lot of money, almost guaranteed, or safer, if you just put it as something like an index fund, like the S&P 500. And then third, I want people to realize that there's better ways to invest. So I highly recommend everyone look into low-cost index funds that have a basket of the 500 biggest stocks in the U.S. or the 3,000 biggest stocks. And that way, you're not betting on any one individual company, or even 5 or 10 or how many you buy. Now you're betting on 500. And the chance of winning when you have 500 of these lottery tickets that you bought at a 30% discount is much better than if you buy 10 lottery tickets, or especially if you just bought one lottery ticket, hoping for a a much bigger win that you bought for 90% off. So it doesn't mean you can never buy individual stocks, because some people will make a lot of money. But for most people watching this, unless you're just taking 5%, maybe 10% of your total net worth, so you have $100,000, maybe just putting $10,000 into it. If you have 10,000, maybe just taking 1,000. Unless you're just taking this small amount where you're just like, you know what, I'm gambling on this. If I win or lose, it doesn't matter. I'm not going to need it because I have a savings fund to pay rent for the next 6 months or a year. I have money coming in still, I'm not worried. Yeah, take the gamble, because you might make a lot of money. To be honest, if some of these big companies start really tanking and they're on sale for more than 90% off, their share prices drop to like $5 or $1 or $2, I might buy some, just a few, 10% or less of my total net worth, just to gamble. But it's gambling, and I want you guys to remember that. Tomorrow, I'm gonna make a video on how to properly invest. Make sure you subscribe to this channel to see it. It's already on my blog, johnnyfd.com. You can read it there. You can listen to it on my podcast, Invest Like a Boss, with my partner Sam. But I'm gonna record a video and explain to you in detail, just like I did today, how I got into index fund investing, what it means, and why it's such a better way to invest. So if you like this, make sure you leave a comment, subscribe to it, and let me know if you have any questions about anything I talked about today, or anything that you want in the next video. I'm happy to help. Again, best of luck to everyone. There's gonna be a lot of money and a lot to be both made and lost during these times. I hope you're on the winning side, and I'll see you in the next one. Bye-bye.